The crypto market just went through its largest liquidation event in history. Over $19 billion wiped out in less than 24 hours. But while everybody was watching red candles, Wall Street continues to quietly make some of the largest moves yet into digital assets. What is up, everybody? Solomon here. I hope you guys are all having a little bit of a better day than we were all having last Friday and Saturday. All right, let's start with the bear. Last Friday, a tariff headline hit right as the weekend liquidity disappeared, and that spark ignited the most leveraged market in history. And $19 billion within hours worth of positions were totally liquidated. Exchanges froze, auto deleveraging kicked in, et cetera, et cetera. Bitcoin actually wicked all the way down to about $106,000. Crypto market as a whole went all the way down to, let's say, around $3.2 trillion or so. And, you got to look at this right now, too, and it's kind of actually comical that an event like that, which was so crazy, pull this back up on the monthly chart. October is still a green month. Pretty wild. Ethereum dropped to under 4K, recovered almost instantly. Most digital assets have recovered a lot of the losses that were just incurred. And there's a couple of digital assets that are over where they were at with that market crash. Notably, I think I saw Tron and BNB, which is wild in and of itself. For perspective here, the COVID crash in 2020 liquidated almost $1.2 billion. FTX, as we mentioned on Saturday's video, $1.6 billion. This one was $19 billion, 12 times larger than anything before it. This wasn't retail panic, though. This was a mechanical flush, and it's starting to look a little bit apparent as well. So in the bull scenario, nobody notices some of the stuff going on behind the scenes. Citi Group, one of the largest financial institutions in the world, this just came out today, reconfirms and puts a timeline around this, that it's launching a crypto custody service in 2026. Citigroup has quietly been building for 2 or 3 years. And this isn't a side project for one of these big banking entities to take this on. This isn't like a niche, oh, hey, crypto's cool, let's, mess around and launch an NFT. This is institutional grade custody. This tells you that crypto blockchain distributed ledger's time is here and it is now. So this is coming from a bank that already holds about $24 to $26 trillion in assets under custody and administration across 104 markets, covering roughly 95% of global market capitalization. When Citigroup moves, the rest of the industry pays attention. Their custody division is already trusted by some of the largest asset managers on the planet, and now they're preparing custody native crypto assets, not just tokenized IOUs. Citi's strategy is going to mix in-house infrastructure with third-party partnerships, combining regulatory trust with blockchain agility. And they're not alone. JPMorgan is running deposit token pilots on Ethereum. Bank of America, as we just saw as well, Citi and Goldman Sachs, but Bank of America exploring launching their own stablecoin. All of this happening under a far more favorable United States government environment, shaping up things like the Genius Act and other regulatory paths forward, which we just historically have not had in the States. Digital asset regulations that are finally giving banks a green light to build. Citi even invested in BVNK, which we dropped on this video, I think it was Friday or Saturday, which is a stablecoin infrastructure company. This isn't speculation at this point in time. This is plumbing. We saw even the NASDAQ investing $50 million into, I want to say it was Gemini a couple of weeks ago. Pretty interesting that we're seeing investments coming from the other end of the spectrum, the traditional investing in the new age. And yeah, be exciting to watch where this goes. Stumbled across this today as well. This is a speech by Mr. Stephen, and I'm going to mispronounce the last name, Major, executive board member and chair of supervision at essentially the Dutch Central Bank. They just outlined how the Euro system is going to connect distributed ledger technology-based settlement directly into target services. This is the same payment backbone that clears over 90% of interbank value in the European area, running on distributed ledger technology rails. We've been talking about this for a while, the T2 stuff and Target. But you've essentially got an individual from the Dutch central bank confirming what is coming. This is actually pretty fascinating. This guy gets a little bit into the weeds, and it's not that long of a document as well. I guess I'll read like a short portion because I did read some of this morning. I don't just find some of this stuff. Sometimes I'll read through it. I don't read through the 80-page ones. I try to skim. But so let me first say something about infrastructure. This is coming from executive board member and chair of supervision at the Dutch Central Bank. DLT is, of course, a buzzword here. I quote, and the times when regulators thought this was some new kind of sandwich are long gone. Instead of BLT, haha. Distributed ledger technology can play an important role in harmonizing European market infrastructures. As distributed ledger technology matures, DLT could provide a way to overcome persisting inefficiencies in the post-trade market. We recognize that, and we fully support it. However, this comes with a little disclaimer. By inviting a regulator to give the opening keynote, which he's giving here, I'm sure you knew what you were in for. DLT would mean a radical shift in record keeping and finance. It cannot be introduced overnight. Important questions still need to be answered on how to safely adapt to policy and regulation to support it. Also, existing systems would have to be updated while the change agendas are full of other priorities, such as ISO 20022 or kind of a unified messaging standard. Most importantly, it is vital for public and private parties to work together to create a manageable path forward. Now he gets into the European central bank trials and DLT-based security settlements and central bank money. So all this stuff is 1,000% coming. And these are like literally central bankers that are talking to each other about kind of the ins and outs of all of this stuff. This guy's giving a keynote. So this does a couple of things. This tells you right off the bat, the people that are saying ISO 20022 is going to skyrocket digital assets are not telling you the truth. We've been talking about this for a while. It obviously is common sense to unify messaging so that these entities can kind of all be reading and writing and, the same language. You have to unify that before you would ever unify payment systems or settlement systems or any of that stuff anyways. And he's basically saying the same thing. But big picture here is it's all happening. He literally says that they're going to be connecting DLT-based settlement directly into target services. Again, the same payment backbone that clears over 90% of interbank value in the euro area. The two initiatives that he talks about that are coming for these trials are, number one, which is called Pontes. Pontes aims to link eligible DLT platforms to target services as soon as Q4 2026, making digital asset settlement and central bank money possible. And Appia is the second. He basically says Appia here is the blueprint for Europe's next-gen financial infrastructure, which is due later this decade. The European Central Bank DLT trials already involved 64 participants. Banks, market infrastructures, and issuers executing 200-plus test transactions in central bank money. And Europe is also targeting T+1 settlement by 2027. Cutting post-trade lag in half. I think they're at T+2 right now. Obviously, when we get into atomic instantaneous settlement, stuff like that, all the stuff that crypto, blockchain, and DLT can do, you're talking about T+0, but there's still going to be like orchestration and stuff. I don't know if we ever get to actual instantaneous settlement. These aren't pilot memes, though, by the way. I mean, what's going on with the European Central Bank and others, they're quite literally structural rewires of the traditional system. This is where blockchain and legacy finance legitimately just merge. And this has been going on for years. This is just one example of the ongoing trials for Target and T+2 or Target systems and all the stuff out of the Euro system. You can take any jurisdiction and any nation and find some similar stuff on this. I just happened to stumble across this because it just came out. Anyways, so the bears had their moment, and they will always have their moment in crypto, but so do the bulls. And like I mentioned on Friday or Saturday, if you step back, if you have a plan, if you're not over investing more than you're willing to afford to lose, and you understand what's happening with this space and the potential and where we're going, it is absolutely massive. The entire crypto market cap as of right now is still sitting at $3.9 trillion. You can see this massive wick down from that liquidation event that happened last week. We still need to break back above prior all-time high here. And I've got the monthly candle up, not the weekly, but I want to say it was around 4.17 trillion for the total crypto market cap. But it is wild. And it does feel like, hey, even if we go into a bear market right now, at least in my opinion, and prices crash across the board, that would be one heck of an opportunity if you have a plan to potentially pick up some stuff at a discount for the long term. That's not financial advice. It's just my thought process about it. And if prices continue to skyrocket upward, great. But again, an opportunity to potentially not be greedy and make situation changing decisions about your life. If you think you're going to be a millionaire off of $50 or $60 or $100 worth of crypto, hey, it can happen. Crazier stuff has happened in the long term, but that is like straight up still gambling, like I said. But if you actually have a plan and go through that process of developing a plan that works for you, you can slowly change your life. Anyways, the United States and Europe are both building regulated institutional grade digital asset crypto infrastructure. From Citi Group and their custody platform, which they now have a date on, which is essentially 2026, to Europe's Pontes Bridge and the Bank for International Settlements supervised trials in Amsterdam. These all point to the same destination: tokenized, real-time global finance, and all of the aspects that come with it. The timeline here from some of these dates out of the Eurosystem and Citigroup as early as 2026. That's not to say we have some crazy bull market that extends much longer than it's ever extended, although that would be very nice. But it is to say that adoption and that snowball of adoption keeps rolling downhill. You guys know my thought process on it. At some point, the bow is going to break. So what it means, all in all, is if you're here for a quick buck and a quick trade in crypto, of course, or if you've over leveraged yourself, of course, last Friday and Saturday, I'm sure hurt, and that sucks. But if you're here for tokenization, distributed ledger tech settlement, and institutional adoption, kind of a reforming of the global financial system and a reforming of how we engage with it and how we engage with each other over time, because crypto is certainly going to play a part in that as well. This weekend is just more confirmation, the rebound of what we've witnessed as well. Pretty interesting. Not to say we're going to go into some sort of bullish extension or any of that stuff, but it is pretty interesting that you have assets literally like that are above where they were at before. XRP not there yet, but you like type in BNB. BNB is like up over this crash even, which is like wild. I think Tron is similar, and I'm sure there's other examples of that too. It does feel different this time. I'm not saying that greed cycles and hype bubbles and all that stuff is different that time, because everybody says that it always feels different that time. But I do think it's interesting that we had such a crazy quick recovery. So while traders, retail traders and kind of leverage longs and all that stuff got liquidated, you still see the kind of the powerhouses in the global financial elite, these big institutions like Bank for International Settlements, Citigroup, Dutch National Bank, all doubling down at this point in time. Price corrects and plumbing advances. Anyways, who do you guys think won over this past weekend, bears or bulls? I think it's pretty interesting. We've seen a little bit of a rebound this quickly. Obviously, when you see crashes in crypto, that tends to polarize things. I know mainstream media, that's all that was, going on over the weekend. And comparative to how many news outlets I saw posting that there was like a $19 billion liquidation or whatever, I've only seen like a couple announcing like the rebound today. So it's always pretty interesting. But anyways, I hope you guys enjoyed this video. Actually, let me see. Yeah, there was one other thing I had pulled up that I found that was interesting. This is a Bitcoin miner, Mara, buying 400 Bitcoin right after the crash as well, worth $46.29 million to its reserves. This is after the sell-off. Oh, and I'll give a shout out too. Scott, give the Wolf of Wall Street's at Scott Melker a follow on X. I ran some of this through to kind of come up with today's script for you guys. Found this Bank for International Settlements one, and found obviously the Citi one. Last thing here, I guess, real quick, because I had this pulled up for a reason. I am going to try. This is Swift's Cybos 2025 exhibitors. Swift's 2025 event just finished up. I mentioned Andre Casterman, obviously in the XDC ecosystem. I've done interviews with Andre before. I'm going to try to see, and I don't know, I can't guarantee. Genfinity has a media sponsorship partnership with XDC Foundation, but it's still not guaranteed that I can get interviews, and I will ask though. But I think there, XDC Network was an exhibitor at Swift's Cybos event. There was only a few of these. I see Zebic there, which rings a bell, even though I'm not as familiar with them. I've seen some stuff, seen some stuff that looks like it could be positive, and seen some like really hypey stuff that looks like it could be cautious as well. But anyways, I don't really have an opinion there. So, but XTC Network, I think Quant was here. See some interesting names. Volante rings a bell for all the OG XRP individuals. And then I want to say Hedera was here too. But anyways, yeah, Quant was there right there. I'm going to try to see if we can put together some sort of an interview because I think we see like so much speculation on what's going on at Cybos and these blockchain and crypto ecosystems that get invited. If you guys don't follow Tokenizer on X, he's one of the kind of the OG. Actually, like it's always surprising to me that he's a little bit younger, but really nice guy. And he puts out some good content around. Here's Tokenizer's X account at Tokenizer. He put out some content around Cybos too, and I think it'd be cool to maybe get some insight into what actually happens at an event like that. So anyways, I hope you guys enjoyed this video. Hey, look, the crypto market's still here and it's Monday, even after a crazy liquidation event like that. Everybody's still here. Banks are still building. People are still building. People are still losing money and making money. And we're still here trying to capture it all and go through it. So I hope you guys are having a great rest of your day. I guess I'll close out here maybe a little different. So I don't know if this even makes sense to do, but I'll do it anyways. So I went to the doctor last Friday, and I have been increasingly surprised every time I go back, and I hope my blood pressure doesn't go down lower than this. But my blood pressure 3 years ago, with drinking as much as I was and smoking cigarettes and everything else, was like 158 or 160 over like 120 or 130. I forget the exact numbers, but it was like go to the hospital bad. Stop drinking. I'm coming up on 2 years at the very beginning of November of not drinking, and well over a year not smoking. But anyways, I went to the doctor last Friday and my blood pressure was 100 over 68. About 3 months ago, before I quit chewing tobacco, it was 117 over 76. And about a year before that, it had dropped after stopping drinking too. But it is to say, I know crypto and all this space as a whole is a very stressful space. And this is not meant to be preachy. Hey, I would love to be able to drink and do all that stuff. I just can't do it. But if you do have issues with stuff, you can certainly change, and it might seem impossible to do so, but it's only impossible until it's not. And if you make the decision to change your life and actually do decide to change it, if you ever need to reach out or DM me or whatever, feel free and I will try. Or if, go to my Twitter, try to DM me there. I normally check. Always happy to get into a conversation with people. But yeah, feel way better. I mean, I can't believe my blood pressure. I don't look like I'm dying anymore, hopefully. And I like look back at some of the older videos on here. So some of you OGs probably remember, like I used to just sit on the front porch and pound cigarettes and beer, which is like, and I made really bad decisions over the years. Like I made bad decisions about crypto. Thank God I'm still here and alive and everything else. But you can change your life even when it seems impossible. And I will end with that. I will talk to you guys when I talk to you. And thanks.